Are money market funds as safe as they seem? As much as they are popular for their stability, it's only normal, just like any other investment, to have risks. Money market funds have inherent disadvantages that I think you as an investor should know. So in today's video, I'll be unveiling their drawbacks. Stay tuned. Hi, my name is Ms. Wangoi Mwithathi and welcome to my channel. I'll be diving into the key drawbacks of these investment vehicles called MMFs or money market funds. First disadvantage is they are not insured, by KDIC. They are not insured by the Kenya Deposit Insurance Corporation. Banks, on the other hand, are insured by KDIC. So this simply means your money is not insured in case of mismanagement, meaning the absence of coverage eliminates the risk of losing your money, unlike if your money is in a bank account. Okay? So in case of fund manager's insolvency, the investor is at risk of losing their money. The second drawback is it has potential for low returns, especially when you compare to other investments. And that's why you've heard people say a money market fund is giving you way less, unlike someone who puts their money into a business. Okay. Money market funds often yield lower returns, unlike other options like real estate, stocks, or bonds. The trade-off is generally modest returns. So don't expect high returns when it comes to money market funds. If you're looking for something that will give you higher returns, look someplace else. Okay? Another critical aspect to consider is the interest rate that you get keeps fluctuating. Okay? So there's interest rate fluctuations. Money market funds are susceptible to interest rate changes. This means when interest rates rise, the value in the fund may decline. So that's something you need to be ready for. And when the value declines, it leads to reduced yields for you, the investor. You will end up getting less from your investments. The fourth drawback is you can encounter liquidity constraints. These can pose challenges to money market fund investors. While most of the money market funds are liquid, certain conditions can limit your access to your funds. For example, during extreme market stress. When there's extreme market stress, funds may impose redemption gate fees or liquidity fees. Okay? They mostly talk about how the money is liquid in case you want to withdraw. But you need to look out for those days when the markets are extreme. Liquidity constraints can and will restrict you as an investor from withdrawing your money promptly. Okay? It will become a problem. It will either cost you more, or you just won't be able to use the funds when you need the money. That's another drawback people don't talk about mostly. Okay. The fifth disadvantage of a money market fund is the lack of capital appreciation. Okay. This simply means your capital doesn't appreciate. Unlike things like land, real estate, these are things that over time they appreciate in value. Money market funds don't give you that. As much as there's growth, they don't give you, they don't offer significant growth potential. Okay? And this is because they are designed to preserve capital, not appreciate your capital. They are made to preserve your capital and provide income. So most of the time you'll hear, if you want to preserve your capital, money market fund is the best. But when you want your capital to appreciate in time or over time, maybe a money market fund is not the best. Who knows? Do your due diligence. I might be wrong. Okay. So, unlike stocks and real estate, money market funds don't appreciate in value, thus limiting long-term growth prospects. The sixth drawback about a money market fund is there's inflation risk. Or you thought maybe, some people think maybe when I invest in a money market fund, inflation won't. No, it will affect your funds. Money market funds may not keep pace with inflation. The returns might be lower than the inflation rate, leading to a loss of purchasing power over time. The seventh drawback I have for you is tax implications that come with money market funds. Interest earned from a money market fund is automatically subject to taxation. So that's to say, in Kenya, interest earned from money market funds is subject to a 15% withholding tax. Okay? Whether you like it or not. It is taxed just as an ordinary income, thus reducing net return on investment. Okay? I'm not here to tell you money market funds are bad or investing in a money market fund is a wrong idea. No, I'm here to tell you or to inform you about some of the drawbacks that you need to know about. Every investment has risk, okay? And I feel like you need to know these things before you put your foot inside, or before you put your money in any investment. You need to learn about the pros and cons of each investment. Do your due diligence. Money market funds are a great way to grow your wealth, especially if you're not withdrawing the income that is giving you. Money market funds have certain benefits. And for you to invest in a money market fund, you need to have a reason, know the reason as to why you're getting a money market fund. For others, it could be because they need a passive income while maintaining their capital. For others, they need to grow their money. For others, it could be they're trying to build their emergency fund. Reasons vary, okay? Bottom line is, money market funds have their benefits. Just balance the drawbacks and benefits. But it's really important to be crucial about the disadvantages, okay? So that you're well prepared. Consider the factors I've mentioned before investing. Consult a financial advisor if necessary, because they will help you decide or determine if a money market fund aligns with your financial goals, okay? Like I always say, don't go in blindly. Have a risk profile. Assess the money market fund that you want to invest in. Consider historical behaviors and outcomes, okay? So that's to say, everything in this world has two sides. There's the good side of things and there's the bad side of things, okay? Some people say it's three, just like the coin. There's the side on the edge. Back to my point. Don't just focus on the advantages. You forget to look at their disadvantages. I hope this gets to help someone, especially when it comes to deciding if a money market fund is something that you feel you would want to invest in. Okay? That's it for us today. If you'd like to see more videos like this, don't forget to like and subscribe, and you'll be notified once we upload another new video. Thank you so much for watching, and see you next time.